Thanks for staying on with us. A sea of red and pretty much everything succumbing to selling pressure right now, 9,100 on the index. Well, let's talk about earnings. And Wockhardt came out with its quarterly performance where the top line growth was at 687 crores, contracting from 861 crores, although they did manage to deliver a profit versus a loss. Murtaza Khorakiwala, as managing director, Wockhardt, now joins in to talk about the earnings. Good to have you on board. To begin with, can you tell us about that 15% drop in sales on a yearly basis? Would you attribute that purely to the lockdown and the situation at hand?
Yes, I think what happened is in the last year, we had various issues that impacted us in terms of the sale. One was, I think, one of the products that we had, which was a painkiller, came under a narcotic ruling, and there was a change in the regulation. So that had an impact on us. Second is that some of the sales, because of the lockdown and COVID in the last quarter, there was an impact of that. And overall, I think some of the businesses that were there, especially the US, for the generic market, there was some pricing pressure. So as a result of all these factors, we had a decline of sales. But overall, I think one of the objectives that we had in the last year was to do a cost management. And to the extent of the drop in the sales, we were able to compensate that by a control on cost. And therefore, if you see, our EBITDA has actually increased compared to last year.
Okay, so what about the next quarter then? Is that when we'll see the real impact of the lockdown impacting business, particularly for your India business? Will we be seeing a major hit then?
There is definitely going to be an impact of the lockdown in Q1. Because in terms of the shutdown of manufacturing facility, logistics, all that was very severely impacted in April. But by the end of April, I think we are starting to see operations coming back to normal. And I feel they will normalize from May onwards. Some of the logistic and distribution issues yet remain. So you would see some impact in Q1. I feel that as Q1, we end Q1 and move towards Q2, business will by and large should normalize.
Okay, now one of the main triggers at Wockhardt has been the reduction of your debt. So what are the debt reduction plans in place for FY21, 22?
We have overall about 800 crores of payment to be done in the current year, 2021. And also simultaneously, we are divesting a part of our India business to DRL, so which would generate about 1,850 crores. We will use that to repay the debt up to the extent of our repayment schedule. And so from that point of view, our debt should reduce.
Okay, fair enough. And finally, what is the opportunity that you see for the Indian pharma sector due to the pandemic? Do you think that we will see more business? It'll be more lucrative even for Indian players due to the issue at hand?
I think that there will be a few selective products. I feel there are 2 or 3 opportunities that we may have. One is that because of an increased demand of certain products, because of COVID and because of the infection, there will be a sudden demand for these kind of products. So that could be one opportunity. The second opportunity is that because of the overall disruption in supply chain, since India manufactures about 40% of the generic medicines for the US and supply chain being affected everywhere, that could be another opportunity for us. And I think then in terms of the COVID vaccine that is coming out globally, I think India is pretty strong in terms of vaccine manufacturing. We have a good number of companies who manufacture vaccines, right from API to formulation. And those kind of opportunities could also be available for Indian companies.
Appreciate you taking the time out. Thanks much for joining in and giving us a snapshot of your earnings as well as the outlook for the sector.